Hello and welcome to Investment Insight. Before we begin, make sure to subscribe and hit the like button. Now let's break down what's happening in the markets today in a clear and simple way. So I want you to imagine waking up tomorrow, um, asking your iPhone a question, and suddenly realizing that the intelligence answering you isn't actually Apple's anymore.
Right.
Like it belongs to Google or maybe OpenAI, because for decades, Apple has just completely obsessed over having total, absolute control of their ecosystem.
Oh, absolutely. Total lockdown.
Yeah, but the recent analysis we're looking at today reveals a massive, strategic earthquake. They are basically about to hand the keys to their artificial intelligence over to their greatest rivals.
It's a fundamental transformation. And honestly, it goes against literally everything Wall Street traditionally expects from Apple.
Yeah.
We're looking at a complete rewrite of their core business model here.
Which is wild.
It really is.
Yeah.
And right now, in the broader economic climate, especially with the Trump administration, maintaining a very, very sharp focus on American tech leadership and domestic innovation investors are just scrutinizing every single move these mega-cap tech companies make.
Oh, for sure.
So understanding this pivot is just critical for you as an investor.
Yeah.
Because it will change how you use your phone every single day, and more importantly, it changes how you need to evaluate global tech stocks in your portfolio.
Right. So we're taking a deep dive today into how Apple is pivoting away from, trying to build the ultimate AI themselves. They're turning the iPhone into something completely different. It's basically becoming the ultimate AI shopping mall.
A shopping mall, yeah. That's a great way to put it.
But to understand why this matters to you as a beginner investor, we first have to look at what Apple is actually walking away from. Because if we look at the research data, I think we all remember Apple's initial 2024 rollout of Apple Intelligence.
Oh, boy.
It received incredibly lukewarm feedback from the market. They tried to build this massive proprietary brain entirely in-house, and they frankly just fell behind.
They really did. And for someone just starting to invest in tech, it's super important to understand why they fell behind.
Right. What happened?
Well, building a competitive large language model, or an LLM, it requires a speed of iteration and a massive volume of raw data scraping that fundamentally clashes with Apple's traditional corporate culture.
Because they're all about privacy, right?
Exactly. Privacy and perfectly polished, secretive product launches. You can't really do that with AI. They essentially brought a beautifully designed knife to a massive data gunfight.
A beautifully designed knife. Okay, I love that. So fast forward to today, May 7, 2026. The intelligence briefing we are looking at shows Apple is planning a major course correction for iOS 27. They are officially opening up Siri to third-party AI models. So the shift is moving from being a creator of the intelligence to being just a distributor.
Which is a profound pivot. I mean, when you look at the landscape of tech monopolies, the company that creates the product doesn't always make the most money.
Wait, really?
Yeah, often it's the company that controls the distribution of that product that wins out.
Okay, let's unpack this. Because the choices they are offering are huge, the latest reports indicate that users will likely be able to route their daily questions directly through Siri to ChatGPT, Google's Gemini, and Anthropic's Claude.
Right, the big three.
Yeah. And I should note, just to keep the record straight based on the documents, Amazon's Alexa has not been officially confirmed.
Right, despite what you might see on financial Twitter.
Exactly, lots of rumors there. But the big three are in. Let's make this concrete for a second. Imagine Apple's old strategy was like a restaurant trying to cook every single dish on a massive menu entirely from scratch.
Okay, I'm following.
They wanted to bake the bread, grow the tomatoes, grill the absolute best burger in town, but they realized their burger just isn't as good as the guy down the street. So what do? Apple is building a giant food court, a shopping mall. Right.
They don't need to cook the best burger anymore. They just want to own the building where you go to buy it, and they want to take a cut of the rent.
It's a really solid analogy, but I actually want to push back slightly on the economics of that food court.
Oh, okay, go for it.
Because it's actually much more lucrative than just collecting rent. In economic terms, Apple is seizing the service distribution layer.
The service distribution layer. Got it.
Right. Because as a beginner investor, your first instinct might be panic, right? You might look at Apple giving up on having the smartest proprietary AI and think, well, they lost the AI war, time to sell the stock.
Yeah. I mean, that sounds logical.
It does, but Apple is looking at this and realizing that the R&D costs for training these massive AI models are just astronomical. Profit margins in the actual creation of AI are getting squeezed really hard right now.
Ah, Okay, so it's a cost thing too.
Exactly.
Yeah.
Apple's basically saying we don't need to win the AI model war and bleed billions in server costs if we can just own the battlefield itself.
By becoming the mall, they defend their incredibly profitable hardware sales.
Hmm.
You'll still buy the $1,000 iPhone because it becomes the easiest, most seamless place to access all the best AI tools at once.
That makes total sense. And there has to be a direct financial play here too, right? Because Apple doesn't just want to sell the phone, they want that sweet recurring revenue.
Precisely. Think about the mechanics of the App Store. Apple didn't code Uber. They didn't write the algorithms for Instagram or TikTok,
Right.
but they take a commission, often up to 30%, on the economic activity that flows through their operating system.
So they're going to do the same thing with AI.
You bet. By routing premium AI subscriptions through iOS 27, Apple is setting itself up to intercept those transactions. If you decide you want the premium version of ChatGPT or Gemini and you subscribe through your iPhone, Apple takes a massive cut.
That is wild. They basically look at their biggest rivals who spent billions developing this tech and say, sure, you can be on our phone. Thanks for doing the hard work. Now pay the toll.
Exactly. They're literally turning their own weakness in AI development into an App Store-style toll booth.
But, okay, a mall is just an empty building without electricity, right? If Apple is abandoning their own central AI brain, who is actually powering the lights inside this massive new ecosystem, which brings us to Project Campos.
Yes, Campos.
Hmm.
That is the internal code name for this complete rebuild of Siri. And the technical mechanics of how it operates under the hood are absolutely critical for understanding where the entire tech sector is heading over the next few years.
So looking at the technical breakdown in our research, Apple has signed a multi-year deal with Google to use the Gemini model as the foundational engine for Siri.
Right, the engine.
And we need to be really clear here. We aren't talking about a slight upgrade where Siri just hears your voice a little bit better when you ask for the weather.
No, not at all.
The analysis details that Siri is becoming a system-wide chatbot capable of multi-step reasoning across your iPhone, iPad, and macOS.
Yeah, let's pause and define those terms for a moment, because they get thrown around a lot in earnings calls, and it can get confusing.
Please do.
So a system-wide chatbot doesn't mean you just open an app and type a question. It means the AI is woven into the very fabric of the phone itself. It can see what is on your screen. It can access your files, your photos, your settings.
Okay, so what does multi-step reasoning actually look like for the everyday user? Like, give me an example.
Great question. Under the old Siri, if you asked it to do something complex, it would just give you a web search result.
Which was always super annoying.
Very annoying.
Yeah.
But multi-step reasoning means the AI can execute a sequence of logical actions. For example, you could say, hey Siri, find the email from my accountant last week, extract the total tax amount due, and put it into my monthly budget spreadsheet.
Oh, wow.
Right. That requires the AI to search, read, comprehend, open another app, and input data. That is what Google's Gemini is bringing to the table for Apple.
Okay, that changes the game entirely. But there's a massive misconception floating around that our sources specifically call out.
Yes, the coding rumor.
Yeah, people hear about this deal and assume Google engineers are like sitting in a basement in Cupertino writing code for Apple's operating system.
Exactly. And we really need to dispel that myth right now.
Yeah.
Google is not fixing Siri's code.
Right.
Apple is utilizing Google's Gemini strictly as the core inference layer, while Apple rigorously maintains total control over the product interface, the privacy safeguards, and the user experience.
Let's define inference layer for the beginner. Is that basically like, so Gemini is the brain actually processing the complex thought and doing the math, but Apple provides the personality, the voice, and the mouth that speaks it.
That is exactly right. The inference layer is the engine of logic. Apple sends the raw data of your request to that engine. The engine infers the answer and hands it back.
Gotcha.
Apple handles how it looks and feels to you.
But wait, let me push back here for a second.
Sure.
If I'm looking at my portfolio and I see Apple, which is historically the most secretive, proprietary hardware company on Earth, using Google's Gemini as the underlying logic engine, isn't Apple handing the keys to their biggest rival?
It definitely looks like that at first glance.
But it's like Apple is designing this beautiful luxury car chassis with a gorgeous leather dashboard, but they are buying the actual engine block from Google. Doesn't that make Google the real winner here? Why would Apple accept that?
It's a calculated trade-off. And you've hit on exactly why this is a massive strategic victory for Google.
Really?
Yes, Apple gets the beautiful car that drives perfectly, which stops their customers from switching to Android.
Yeah.
But Google, Google gets scale that money simply cannot buy.
Ah, scale.
Right? By powering Siri, Google's Gemini instantly, overnight, gains access to an installed base of over 2 billion active Apple devices. For a beginner investor trying to understand market dynamics, this is a masterclass in a concept called standardization.
Standardization. Okay, make that tangible for me. Are we talking about how, like, all the electrical outlets in our houses have the exact same plug shape?
That's a perfect way to look at it.
Yeah.
Think of Google as trying to become the fundamental utility company for the AI age. They want Gemini to be the electricity.
The electricity. I like
And
that.
most people don't care what specific power plant generated their electricity, right? They just want the lights to turn on when they flip the switch. By becoming the default logic engine beneath the surface of the iPhone, Google is standardizing its technology across the globe.
So everyone just builds around it.
Exactly. Developers will optimize for Gemini. Websites will cater to Gemini. It is a phenomenal expansion of their reach, moving far beyond just their own Pixel phones and weaving themselves into the very fabric of iOS.
So Google gets to be the global power company, and Apple gets to be the luxury real estate developer who owns the buildings. That makes sense on paper.
It does.
But it brings up a huge operational question. With such a massive technological overhaul and relying on external partners to provide the electricity, so to speak, can Apple actually deliver this on time? Because they're biting off an enormous amount of complex integration here.
And that, right there, is the multi-billion-dollar question that the entire stock market is watching with bated breath.
Seriously.
The execution risk is staggering.
Because according to the timeline in the documents, Apple is highly likely to announce all of this at the upcoming WWDC, the Worldwide Developers Conference, which runs from June 8 to June 12. But here's the massive catch. A full working rollout by September, which is when they always launch the new iPhones, is still just a market expectation.
Right, it's not guaranteed.
It is not a confirmed guarantee at all. The analysis suggests several of these complex multi-step reasoning features might actually be delayed until late 2026 or even 2027. And the pressure on them right now is just immense. Literally yesterday, May 6, 2026, Apple settled a $250 million lawsuit regarding false advertising over their previously delayed 2024 Siri AI promises.
Yes, and that legal settlement is a massive flashing warning sign for investors. It's really unprecedented for them in this specific context.
Here's where it gets really interesting to me. $250 million. I mean, let's be honest, for Apple, that is practically loose change they found in the couch cushion.
Oh, absolutely, a drop in the bucket.
But as a penalty for just being late on a software feature, that is a massive public black eye. The consumers were angry enough to sue because they bought expensive phones based on a promise that wasn't delivered.
Exactly.
So if Apple delays this again, if iOS 27 and Project Campos don't hit the ground running perfectly this September, what does that actually mean for the everyday investor holding Apple stock?
It means the tech world's patience has officially run out. You're right, the $250 million doesn't dent Apple's balance sheet. But what it represents is deeply damaging to their core asset, which is consumer trust.
Right.
It shows that the market is no longer willing to accept a coming soon label when it comes to artificial intelligence. If another delay happens, it won't just be a public relations hiccup. It will directly, measurably impact what Wall Street analysts call the upgrade supercycle.
Okay, let's unpack that term. For someone totally new to tech investing, what exactly is an upgrade supercycle, mechanically speaking?
Let's break it down into simple economics. Usually people upgrade their phones randomly, right? Maybe your battery dies or you drop it in a lake.
Guilty.
Right. But an upgrade supercycle happens when a new hardware or software feature is so revolutionary and so essential that millions of consumers who are holding on to older 3- or 4-year-old models all decide that their current phone is obsolete at the exact same time.
Oh, I see.
They all rush out to buy the brand new model in the exact same quarter. It creates a massive, concentrated spike in revenue that Wall Street financial models rely heavily upon.
Right. So right now, investors are betting their money that these new AI features, this whole mall concept with ChatGPT and Gemini, will trigger that supercycle.
Exactly. But if the AI isn't ready in September, and it's just another promise of coming later this year, consumers will just hold on to their old phones for another 12 months.
And the bubble bursts.
The supercycle collapses. That directly hurts Apple's bottom line. It tanks their quarterly earnings projections, and fundamentally, it erodes their brand prestige. So, as an investor, keeping a very close eye on the actual release timeline post-WWDC in June isn't just tech trivia. It is absolutely critical for anyone tracking this space.
Wow, so there is zero room for error. Apple has to show up to their own mall's grand opening with the stores actually stocked and the lights actually on.
They have to.
Which brings us to the ultimate bottom line for your portfolio. We need to look at the investment horizon here. How does this whole strategy play out over time?
To evaluate this properly, we really have to divide our thinking into short-term relief versus long-term risk.
Right.
Because the implications for Apple's stock change drastically depending on your time horizon as an investor.
Okay, let's start with the short term. Looking at the data, this seems like a massive undeniable win for the next 12 to 18 months.
It does.
First off, it's excellent for everyday users because you get the absolute best of ChatGPT, Gemini, and Claude all in one sleek device. You don't have to choose or download a bunch of clunky apps.
Right.
And logically, it's good for Apple stock in the near term because it instantly patches their most glaring weakness. It stops frustrated users from jumping ship to an Android phone just to get a smart assistant that actually works.
I agree completely. In the short term, it's a very pragmatic, highly effective tourniquet. It stops the bleeding and stabilizes their market share.
But the long-term risk outlined in our research is absolutely fascinating.
Yeah.
Apple risks becoming overly reliant on these external companies.
Uh,
Think about consumer psychology. If I, as a user, stay with my iPhone because the iPhone has the best, easiest access to OpenAI, rather than Apple fundamentally makes the best AI, then Apple slowly loses its core identity as an innovation leader.
That's the danger.
It creates this wild new competitive arena. The tech war isn't just about who makes the best AI model anymore. It's about who sells their AI best inside Apple's ecosystem.
And you are pinpointing the exact vulnerability of transitioning to a pure platform strategy.
So what does this all mean for the future? Let me try another analogy here to see if we can capture the danger. Apple is basically becoming the cable TV provider.
Okay, the cable box.
Yeah, think about the old cable box sitting under your TV. Sure, you pay Comcast or Spectrum every month, but you're not really there because you love the cable box. You're there to watch HBO or to watch live sports on ESPN.
Right.
If HBO leaves, or if ESPN starts streaming on their own direct app, that cable box suddenly becomes completely useless to you. Is Apple at risk of becoming just a really expensive glass cable box?
That's a strong visual. But I would actually refine that analogy a bit because the danger is even more acute. A cable box is entirely passive. It just passes the signal through. Apple's interface, iOS, actively learns from you and shapes your daily habits.
That's true.
But your point stands. If the value shifts entirely to the content, the AI models, the hardware becomes commoditized. If we connect this to the bigger macroeconomic picture, the core takeaway for the beginner investor is this. When you look at Apple today, you must evaluate them as an AI distribution platform, not an AI creator.
So their identity as an investment completely shifts.
It has to. Their immediate revenue might jump significantly from the subscription tolls they collect in this new mall, but their strategic economic moat is getting shallower. The real existential test for Apple won't be this September. The real test will be their ability to quietly rebuild their own internal, highly capable AI models by 2027 or 2028.
So they're just buying time.
Exactly. They have to do that in the background so they don't remain permanently dependent on fierce rivals like Google and OpenAI.
Yeah.
Because if they don't, well, then your cable box analogy becomes reality. They will just be a piece of glass that you use to access other companies' brilliance.
They have to build their own HBO, essentially, while renting out space to the current HBO.
Exactly. They are buying themselves time with this Google Gemini deal and this open mall concept.
Yeah.
It is a brilliant tactical move to save the 2026 product cycle. But make no mistake, it is rented time. And rent in the tech industry is incredibly expensive.
Wow. It really changes how you look at the phone sitting in your pocket or on your desk right now. It's no longer just an Apple device. It is an active, ongoing battleground for the biggest tech companies on Earth to fight for your attention and your data.
Absolutely.
Well, thank you so much for acting as our guide through all this complex analysis today. It is a lot to digest, but looking at it through that economic lens of the AI mall versus the creator really clears up the confusion.
It's a pleasure. The market is evolving faster than ever, and understanding these underlying structural shifts, not just the surface-level product announcements, is really the only way to invest smartly and protect your portfolio.
Absolutely. And as we wrap up, I want to leave you, the listener, with a final thought to ponder as you look at your own devices and consider your own investments. If this distribution strategy actually works flawlessly, And the iPhone successfully becomes this ultimate, invisible, seamless hub for all these different brilliant AI minds like Google, OpenAI, Anthropic. Will we eventually stop caring entirely about what brand of phone we hold?
It's a great question.
If the AI is the thing we actually interact with all day, will we only care about which intelligence we are talking to? Could the hardware itself, the beautiful aluminum and glass that Apple spent decades and billions of dollars perfecting, eventually just become an invisible, interchangeable window into other companies' brains? It's something to think about next time you ask your phone a simple question. Don't forget to subscribe and hit that like button.